Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Let's go straight over to the screen here because we do have a bunch of economic news coming. I was all ready, and then I realized that I had not set the stream up. So, all right, they're definitely thinning out for this. So we're going to get the GDP quarter over quarter final. They're looking for a reading of 3.3%. Okay, so initial jobless claims came in lower than expected at 218 versus 213. U.S. durable goods at 2.9% versus an expected negative spot 3. And U.S. GDP quarter over quarter final 3.8% versus 3.3. That is a pretty good number. That's a pretty good number. By the way, which quarter is that? I don't know, the first quarter, is it? No, it is U.S. International. No. Well, it's not on their website. Release quarterly about 85 days after the quarter ends. So that must mean that it is first or second quarter. Which I don't know if that would fully reflect tariffs. Treasury is definitely taking a hammer, getting hammered here though. We should enable our strategy here. This might be a good situation where it could trade.
Order submitted.
Oh, whoops, I have the speakers on. Turn that off. Oh man, I turned it on at the right time because that bar was going below 43. Cool. Okay, they push a little bit further there. There is some serious absorption there, though. I don't know if they're gonna push through or not. The thing is, okay, the employment claims, that's good. The employment and maybe that actually matters more than GDP. I don't know. The GDP number, I'm concerned that those numbers are kind of like reflect more all of the stuff coming through before tariffs and whatnot. So I do think that in the long run we're going to come in here and see ZN second SD between 06 and 07.5. I won't be here the whole session. Oh well, man, if that's where the level is and they're going to go to it, they still got some room to move, don't they? Interesting. Anyways, I do kind of expect that like I think that this is second quarter. Do any of you guys know? I wasn't able to figure out from looking at their website. Was the GDP that we just got first or second quarter? I do expect like third quarter to be okay, but not as good. You know, and then we'll see. I also kind of suspect that some of the negative impacts of tariffs won't really be felt by the whole economy for a long time afterwards. You know, like maybe a year out or something like that. But I also, everything that I've read and understood from it, and so going back to what we were saying before the tariffs got implemented, was that like the actual net effect is not as strong as people think it will be. And that so far has turned out to be true, right? But I just don't really see like from a flow perspective, you know, where's the buys? There was some absorption there at 11 for sure. But given that we got this, you know, the options say 06, 07 half-ish area, you know, I think there's a pretty good chance this could continue through despite the absorption. Let's see. I guess we do have to be careful though, because with that much absorption, if it does stop, there's probably going to be a pretty big washback. Okay, well, they got through 10. Yeah, 09 half. They're eating through that pretty easily too. I feel like where my robot got in at like 111 half, if I had chosen to take a trade, I don't know if I would have necessarily gotten a better price. Maybe could have gotten 1 or 2 ticks, but overall it was pretty good. So from my perspective, I think I'm not going to touch it and let the robot do its thing because it's already got a short. You know, some of this absorption here does make me feel like that there could be some washback back to 11. But I don't think that that is a very wise trade. It's just like, it might work, but it's like 3 ticks. 3 ticks and you're risking. Nah, I don't know. Maybe it's close enough. There's still iceberg on the offer side. There is an auction today too, isn't there? Let's see here. Feds Williams, Feds Schmidt, U.S. existing home sales, Brown, Bowman, Kansas City Fed Composite Index, 4-week bill, 7-week bill. If ZN breaks that, keep an eye on ZV for 17 to 18. So I think one of the things that we have to look at, like if we're using those, right, is like, can we guess when it's going to breach and when it's not? Or not. And breach doesn't necessarily mean like it touches 1 tick beyond it, but that like we end up below that by the end of the session. Right? And I think in this situation, The answer is no. I think in this situation, the answer is no. I don't think that the economic news that we got was so impactful that it's like push, like it's just gonna push and push and push. But there is auctions today, and so they're gonna use options to hedge for the auctions and things like that. So I think that's a good reason for those levels to hold. And I must say, there has been a pretty significant amount of volume trading between this 12 to 09 area. Yeah. First standard deviation for ZB down, so that's well within, yeah. But I'm kind of saying, though, that the 07 half, let's call it 07 half. I think in ZN that will hold by end of day. If the news was big enough to blow the 30-year out of volatility, then yeah, I get what you're saying. Yeah, yep. Very, very likely for it to hold in ZB, but I also think it's likely to hold in ZN. I mean, like, just there at 09, 21,000 contracts. It's a lot to have traded at what is essentially the low. So while there are some big sellers and it's a little bit hairy of a trade, you know what? Let's try an experiment. I'm gonna put my limit order one tick above it. Take cross-reference trades off of that, but you gotta be really what do you mean by cross-reference trade? You gotta be really good about your entry window in terms of price. So this is where I think about what would be the most ironic thing that could happen here in this situation. And I think the most ironic thing that could happen in this situation is that they don't touch 08, but they do reverse. Right? Okay, well, they touched it. No fill. Like, ZB is hitting its first standard deviation and you want to take a mean reversion trade, you can do it in any of the other treasuries, but they won't match tick for tick where they turn. Oh, assuming it does, yeah. So I am making the bet that they are going to reverse somewhere in the 07 half area and mean revert back towards, let's say 110. Or not 110, 11. 11 even. Okay, so it did fill. So I'll put my take profit up there. Let's just do like 1, 2, 3, 4, 5, 6. Let's just do equal risk reward. 1, 2, 3, 4, 5, 6. So maybe an overly simplistic trade. I'm always really weary about like set take profit and stop areas. But in this situation, I'm not confident in my ability to like monitor it and take it off the right spot if things go awry. So I think that I do need to have something out there. So we'll just do that. I would think that if the trade is correct, And granted, it looks like I could have put it at 07.5. 07.5 versus 08 is fine. Below that, like, is it going to get 07? Then that just means like our theory on the area is wrong. But so I'm not going to worry about that part. As long as it doesn't go like full 6 ticks past it, right? Then we'll stop out. Then we'll say that we were wrong. Okay, so there was still an offer, a big iceberg on the offer that they just cleared. 5,000 contracts at 07.5, and then they ticked up, and it was a pretty strong uptick, by the way. I'm going to recenter the DOM here. Okay, so they're trading another iceberg at 07.5. Although I would say there's reasonable trade on both sides. It's clearly the imbalance is clearly still on the sell side at the moment. Is it gonna flip? Oh, it's kind of ramping a little bit. Okay, they're testing it. And offer's not decreasing. So did you see that? Like they put some contracts on the bid to make it so that the bid was larger than the offer to see if any of the offers chickened out, and they didn't. But big iceberg on the bid. Okay, so they did take it. It took all 4,200 contracts to make it go bid, but they did do it. Wow, and then the seller took the 26 on the other way. At the moment, it looks like you got big guys on both sides that are willing to throw out a lot of contracts. So I think we kind of wait a little bit for them to both get filled, and we'll see if it does something. That might have been it, that 42, and then we went bid, and maybe the offer is filled. Because you're not seeing them hold as many contracts at 08.5. Of course, we'll see. They haven't upticked yet. Okay, 25.72. Yeah, this is looking really good for us. So I'm starting to see a lot right here in this situation of both the bid and the offer being relatively high. Okay, 3,400 to trade that one, but there was a point where there was 4,000 contracts on both sides. So like usually one side, like it is right now, 800 contracts on the bid, 5,000 on the offer, right? Usually there's a big imbalance there, right? They didn't stack when it went. Okay, there we go. 27. But there's been a number of situations where it upticked and there was at least 3,000, if not 5,000 on both sides. So there's definitely some trade going on here. Like, kind of interesting. This week has been an unusually tight week, hasn't it? And I expected it to be quieter, but not as tight as it has been. Not as tight as it has been. So it's really curious to me because I don't consider final GDP to be like an A tier, S tier event. It's like a B or a C because it is like the third release on that particular data point, and the amount that it changes usually isn't that much. 3.3 versus 3.8 is actually a pretty big beat, right? For the third revision, essentially. But so why would they be like waiting all week for GDP? That doesn't make sense. There has been auctions going all week, but that would usually mean like more activity than we've seen. Because it's not just that that it's been tight, that the volume has been kind of lackluster too. So like, what were they waiting for? And now the GDP comes out, and there is just a lot of trade going on here. I'm not very good at tracking like for the volume for the session. I have this thing over here. Wait, where is ZN on this? ZN 718,000. I don't really track. Is that a lot or not a lot for this point of the session? Maybe we could pull up a relative volume indicator or something like that. But the absorption and the amount that we've been trading, 20,000 contracts at all of these prices below 09, is a lot. It's a lot. So why now they're interested in trade? Does like the GDP doesn't quite make sense to me. But I think that's really the only explanation in this situation. So, very interesting to me. I would say that so far, well, how many favorable ticks did we get? Do I have a window positions? There we go. Oh yeah, because it's saying that we're at 07, but MFE 2. Okay, so we've had 2 and 2. 2 and 2. I would say I was maybe 1 off on picking the spot. That's not bad, right? Yeah, side-eyeing that ZV though, negative delta implies more push. Okay, so we should in that's a good thing to point out. At that point, we should be checking the spreads. What has the spreads been doing? Gentle flattening through the session. Gentle flattening through the session. So in that case, you would expect the 5-year to move more than the 30. What are the levels for the 5-year? At the very least, it could advise you out of the ZN trade from a risk management. It could. Well, I mean, all 3 of them have been negative delta through this move, right? 5-year blew them all out. But what was the level in the 5-year? Like, if we were to revert back to that level in the 5-year, where would it be at? See, so, like, we have come down to the bottom. Okay, 03 half. Oh, yeah, that's well above the VWAP. Interesting. Okay. Anyways, they are continuing to, let's say they move down. I would say from this point, the change in cumulative delta is actually kind of flat. Okay, there's an iceberg at 07.
Order canceled.
So I am kind of feeling you though, like, well, so the thing that will really scare me out of a trade is when I get into it and I'm seeing the market orders are just objectively against me, overwhelmingly against me, right? Because generally speaking, I get in, I'm anticipating more market buy orders coming after me, right? And in this situation, I would say that we got that, but maybe not quite enough to really get to the target, you know? And then it come back down, and so that's a wash. So I might have been able to say scratch it at 08, right? But I still think that even right now that the larger theory should hold, that it should be difficult for them to continue pushing below 07. You do see, you know, they started trading 07 and there's like iceberging there, and they continue to stack pretty well when it ticks back up. Depth of market Dom, good morning. Wait, is that a new name or is that a... I think that there has been somebody with a name like that, but I don't think straight up depth of market. So I think that is a new name. If you're not a new name, then I apologize, and I'm just not keeping up with people as well as I should, I guess. Sometimes I think like I need to make a spreadsheet. Well, I kind of do have a spreadsheet, but then I'll forget about it. It's like I should have a spreadsheet, track every little tiny piece of information about everybody that ever says something in chat here. You know, like super creepy like. But I don't do it. I don't do it. So I think part of the exercise here, one is can I catch a spot like, how do I say this? I don't know, like does it work as a setup? I guess you could say, right? But then I think that the other part of it is just to say, is like trading that level feasible from a risk management perspective? Because I'm gonna bet you. I'm going to bet you that if we went and we did a study and we said, oh, by the way, that was like aggressive pushback at 08 on the downside, that offer kind of pushed back. We'll see. Anyways, what was I saying? Man, 280 HD today, huh? If we were to do a study to say, if you buy at the first standard deviation, after a big news event like that, right? And you held it to the end of the day, how much do you make or lose? And I'm going to bet that that overall net that it would be an unprofitable strategy, but that you would win more than half of the time. Which is to say that most of the time it does hold, but that when it doesn't, you lose a ton, right? So you could say, yeah, you win most of the time, but that doesn't necessarily mean that you can hold a trade with it with a reasonable amount of risk. You know what I mean? So here in this instance, I think that it could retrace as much as 6 ticks. So I give it equal risk reward. How easy is that for me to hold? And that's another thing that I'm watching here is like, you know, how much back and forth, how much kind of confusing action is there that kind of like scares me out of the trade and that sort of a thing. So I think that's also a reason for me as an experiment to keep it on and to keep holding and really let it absolutely stop me out so that I have the experience of, okay, what is it like being in this particular trade, right? You don't lose a ton if you keep your risk parameters within the volatility window, yet if you took that long with a 20-tick stop, you'd kill a strategy. Yeah. So when you lose, you're going to lose big, for sure. And we're kind of making that, because part of the trade is, here's a key level based on options activity that we think is likely to hold. But we're also making the play that, yes, there was significant news and that news does justify a sell, but not enough of a sell for them to significantly push below that. And that is, you know, I want to look at things from like, you know, number of contracts perspective, right? So to me, it's like the number of contracts that are going to sell in that situation isn't going to be enough to overcome the standard deviation or like the volatility projection levels. If I took that trade you took, my stop would have been 05 half. Why 05 half? Oh, wasn't I supposed to take a child at 7 o'clock? Hold on a second. I'm gonna go check on some things, okay? One tick out. What is the volatility? Oh, you're saying that the volatility window... Wait, how are you determining that? Are you saying that, like... Are you saying that, like, your... when you do options, you kind of have it as, like, a window around that level? Or are you saying that, like, based on the current volatility, that's... if it moved further than that, moved further than 5 ticks, then I'm wrong? Because, you know, most of the time, a standard size move in ZN is 4 to 5 ticks. Okay, so 06 is the second standard deviation for the session. 07 half was the second standard deviation for the overnight. Oh, that give me a window to place a trade. I probably wouldn't have gone in at 08 because I'm pickier, but I would have entered in that window with a stop 1 tick outside of it. Right. So I put it in at 08 because I was worried that there would be a situation where they just kiss 07 half and don't clear it. But from like an entry perspective, that didn't really work. And my recollection just from us doing this is that usually they do go through it for a tick or two. So I probably don't need to be so cautious. I probably could have put it in at 07 half or 07. If I had put it in at 06, then we wouldn't have gotten filled, right? Interesting. I would target the first SD in CN at 13. Well, okay, that's interesting. So here was another thought that I was having, though, just as we were talking about that. Is like... Yeah, you gotta run. Well, really quick. What if I were to say, hey, the most that we had against us was 3. And now it seems to be going in our favor, so we got 3 in our favor. We should take it off. I wonder, I should go and make a study that tests that. That might be interesting. Okay, anyways, I hope it works out. We'll talk to you maybe tomorrow. We can talk about it some more. I'm gonna go check with my wife real quick because I thought that one of the kids had to be taken to school at the moment. April. Thank you so much. I totally did not realize. Okay, so I am wigging out here a little bit. Like, okay, this is almost gonna fill. That's cool. I feel good about that. Okay, but the robot, do you see that? It took the short. It took profits. Well, it got a reversal signal essentially. The reversal signal was literally one tick from the low. Literally one tick from the low. 07. It could have got it. I mean, the way that this is doing it, it factors in the level 2 and all of that. So highly likely, if that was live, that it would have gotten that price and everything. Well, okay, so it's up 6 ticks. But that's just amazing. That's just amazing that the entry signal was that good. And, you know, I did want it because, I thought, well, news is going to be moving here. These might be some of the situations where we do want the robot to trade, unlike the rest of the week where it just takes the dumbest trades, right? Okay, so we did get some excursion at 11, but not enough to fill. Showing 263 there, so. And my spot in the queue, 3,000. But I think we're pretty likely. Now, one thing that's interesting to note is that the VWAP is there at 10.5. Regular session VWAP. So something to note. Let's see here. IQZ. In the stacking column, the orders are limit orders or market orders. So I'm not sure what you mean by stacking column. So let me... Oh, I don't have my pen open. Let me just mark it. The blue column is limit buys. The orange-red column is limit sells. And the two columns in the middle are the market orders. These are market orders. These are limit orders. So when you said in the stacking column, there's another column you can add in Day Trader that shows stacking and pulling, which is basically the change in the limit orders. It would basically show like, okay, we just ticked down and 3,700 contracts added on when there wasn't anything there before, and it would show you in the stacking column 3,700 added. And, yeah. Initial jobless claims tumble back near year-to-date lows as Texas trauma fades. They've got a bunch of stories here on Zero Hedge. But the one that I want to read is the GDP one. Started off as 2.96. 1 month later, it was revised higher to 3.2. And moments ago, the Bureau of Economic Analysis reported that Q2 GDP was revised once again and even higher this time by a whopping 3.83. The highest print in nearly 2 prints since the 4.7 in Q3 2023, and primarily reflecting an upward revision to consumer spending. Very, very interesting. According to the BEA, the increase in real GDP in the second quarter primarily reflected a decrease in imports, which are a subtraction in the calculation of GDP, and an increase in consumer spending. These movements were partially offset by decreases in investment and exports. Feel me. That bid is stacking up. Come on. You can do it. Okay, they flipped it. The bid is stronger than the offer. but it's not causing them to buy there. Being stingy. Come on. They're really trying hard. They're ramping it and everything. And recenter there. Do you want me to read all the details? I kind of feel like that when I'm reading numbers that you guys probably can't. Like, you probably better to read those and look at them yourselves. Okay, we did get cleared. Good trade. Okay, good trade. And we'll let the robot stay in its thing and do its thing. So you're still getting strong buying. Actually, it's going to be interesting. Is this whole volume, because we're getting close to the entire change in cumulative delta equalizing in Xeon. So that could be interesting. Before Thursday's figures, the Federal Reserve Bank of Atlanta's GDP now estimate penciled in a 3.3% rate of growth in the July-September period. However, economists are less upbeat about growth in the fourth quarter as weaker employment dims prospects for consumer spending. Yes. From an industry perspective, the increase in real GDP reflected increases of 10.2% in real value added for private goods producing industries and 3.5% for private services producing industries. They were partially offset by a decrease of 3.2% in real value added for government. BEA also issued its annual update of the National Economic Accounts, which covers GDP and related series in the past 5 years. While it incorporated newer, more complete source data, the agency said it was unable to purchase certain statistics related to tax returns for corporations and sole proprietorships. Turning to inflation metrics, a revision showed the Fed's preferred inflation metric, the Personal Consumption Expenditures Price Index, excluding food and energy, rose at a faster clip throughout 2024 and was also marked up in the second quarter to 2.6%. Economists expect monthly PCE data, which is due out on Friday, to show the metric advanced nearly 3% in August from a year ago. Okay, it is time for me to get going. I will be back in a few minutes. We'll see what the robot does here, but we got a good trade on the buy side. Looks like it is gone even a little bit further, so interesting.
Order canceled.
All right, we're back. Well, looks like the market did not do much without me. We did touch 12. Just curious because Uzi said I'll give you 12 to 13 for a potential target. I took it off at 11 because of some volume that I'd seen there. But it has gone pretty quiet. Let's see here. Oh, and Robot took profits on that. How did it exit? Let's see here, coming back. Executions. Position 1S name. It was because it received the counter signal. The Robot's doing good, man. It's up 281 today. Caught both sides of that. That was pretty amazing. Now, how's the S&P 500 doing here for the first few minutes? It looks like they're still battling it out on the open, but they are down. They're down. Japanese yen is down. Dollar is up. Gold. Well, you know, did we ever come back? I don't think that we ever came back and looked at the charts. So here we got Zen. Pretty solid down move. Getting back into this area that we were at before, like the really bad jobs numbers and all that. S&P 500. We're getting a bit of a pullback. Again, I think that this was the Federal Reserve Day, so you're getting back to those levels. This area down here, like 66.10, let's say. Probably a significant level. I don't know if we'd be able to get down there today, though. Oil had another good day yesterday. Gold, a little bit of a pullback, but nothing too interesting there. Silver actually pushed further. Silver's getting crazy. Again, all-time high is like 50. And let me tell you guys, last time that silver was at these levels, it was zany. Like, everybody was talking about it. It was a real zoo. That was one of the best trades I ever made. It got to 50. I was long going into it. It got to the all-time high, went short, made money on it collapsing afterwards. It's one of my best trades ever. Copper. So there has been a disruption at a major copper mine, reducing supply, and Goldman is adjusting all of its estimates for copper prices upwards. That's kind of what's been driving us higher. Does look like, though, pretty significant pullback today. Japanese yen taking a bit of a hit the past day, and then further today. Still some key support levels below us. The dollar not as interesting looking, but some dollar strength here. 97.7. And Bitcoin. Bitcoin's still kind of hurting here. It's like kind of. By the way, what's with this right here? Where like it looks like it like collapsed going into the session end, and then the next session it was fine. What? That's weird. Okay. Anyways, maybe come back over here. Look at the daily on ZN. 20. 112.01 is an area where you're likely to see mean reversion thing based on momentum strategies and stuff. Okay, let's see here. Aaron, hey Seth, I've been watching your vids and I'm still quite confused on what to look for in the DOM. I trade Euro 6. Okay, well that's going to be completely different. So here's what I would suggest, Aaron. First thing is I would watch the 10-year Treasury for like a month. For a month or two, assuming that you have the data. Not everybody gets the data, but You know, if you're on like a prop firm or something like that, you probably get ZN data. Get ZN, put that up on your DOM, and watch the way that ZN works. Because the advantage for ZN, it's kind of slow and it's really thick. And so that makes it a lot easier to see where, like what's happening. See what's happening, because you're going to see it all at one price. You're going to see it gradually over time, and it's just so much easier to keep track of. Wow, what is with the liquidity stacking on this pullback? Something weird. So, you know, up to 12, it was like it went dead. We picked a pretty good profit target, but now we're pushing a little bit higher, and I'm seeing massive stacking below us. That kind of suggests that something is up, that somebody is actually like really coming in and doing some significant buys, because that's the sort of things that like JP Morgan and Goldman do when they get involved. Okay. Anyways, when you're watching in ZN, then you're going to start to notice things, right? So keep track of which way the market orders are going, how much it takes for them to clear a price. You know, it ticks up, then it ticks back down, and it ticks up again. And how much did it take each time for it to do that? And how much stacked behind it when it did? You know, like this one, we just stacked down. 3,000 immediately came on there, right? So strong down tick. Those are those little changes and changes in the changes. You know, like before it was they were stacking 3,000 and now they're not. That's a change, right? Those are the little things that we're noticing. They will kind of start to give you clues. Once you understand that in ZN, then you can graduate to other instruments. Okay. Now, currency futures are a very different game. Why? Well, because the volume is not primarily in the currency futures. So the currency market is driven primarily by interbank transactions. They've got this network, and when the big banks make trades between each other, then it gets reported. And the Forex market is basically like a Forex broker is on that network, and you trade with the Forex broker, and then they, you know, sort out those trades with the banks, right? That's how Forex goes. And the currency futures, so 6E, that's basically like the reason that those instruments were invented is you're going to have all of these people over here that they need to hedge for, like maybe they're an importer or exporter, so they're going to hedge their imports and exports. Or maybe they are a momentum trader, and you know, they have all of these momentum trades and other instruments. They need to be able to do things and hedge with currencies. It's those sorts of things. And so the order flow that you're going to see in the currency market is going to be very different and reflects those players, right? So when I'm coming in ZN and I'm making a trade, right? I will say, I think that there's going to be a lot of selling, but there's not enough orders to overcome the key options levels down here. And I can justify a trade based off of that, right? Can't necessarily do that in 6E, because in 6E, I might be able to say, well, because there's hedgers that are doing this and there's these guys that are doing this, I'm going to see this kind of volume in 6E. But that volume that you see on your DOM is not actually going to be a determining factor in where 6E actually moves, because what's actually moving that market is going to be the larger Forex market, right? So that's your first thing is, even though I would think that you would still want to have the DOM and, you know, look at the DOM if you're trading 6E, the 6E is not going to be a very fertile ground for order flow setups. Okay. You're going to have to be able to predict what's going to happen by understanding the currency and the way that the banks move, and be able to, make your decisions over in the 6E, even though you're not necessarily able to see all of the volume, right? And another thing that you're probably going to see a lot of in the 6E is like what I would call counter volume. So like in the treasury, in ZN, if we're moving up, then the tendency is going to be that cumulative delta market buys minus market sells is going to be up as well. There's going to be more market buys. But in currency futures, it is very often the opposite. That if we're moving up, you will actually see more market selling in the currency future because a lot of that volume is hedgers. So would you say that order flow in the currency market is less reliable? For trade setups, yes. But then I would also say that order flow in the currency market, in the 6E, in the currency futures, rather, not the currency market, but in the currency futures, the order flow in the currency futures is completely different from the other instruments. So that's why, like, first you kind of have to understand why order flow moves the way that it does, right? Like I have that order flow video series. You go through that and you kind of understand all of the empirical data about it and all of that. Then you come in and you watch it on ZN and you're going to see those behaviors play out in ZN and you go, okay, like I understand it. And then you can go over into 6E and you can say, well, okay, I understand these behaviors, and but I also understand that it's going to behave differently because of 6E, and you sort it out. But bigger picture, if you want to trade 6E, you're going to have to rely even more than usual on informational inefficiency, which is really, really hard to have an edge in currencies. Like you should know going into this that currencies are considered to be the hardest to trade. In the professional world, you're going to go on a trading desk, and which desk you do is going to change how you do that role a lot, right? It changes things a lot. And the hardest desks to trade on are the currency desks, because you don't really have access to the information. There's way more insiders in those markets, and so you're just kind of at their mercy. And then you can have like really brutal moves in currencies, right? So. Now, the other thing that you are going to notice, though, is that, there are going to be a lot of robots in the currencies that are going to be trying to arbitrage between the FX future and the actual currency market. So especially those bids and offers that, like, you see a big offer and then all of a sudden it cancels and we tick up or whatever. That's usually the robots adjusting because something's happening in the currency market. You really have to pay heed to those. How do market makers use this order flow imbalance data? Are you talking about what I have in my upper left chart? So what I have in the upper left chart is basically a measure of what percentage of the market orders in a rolling window are buy versus sell. So like 53 means 53% of the orders are buy. Okay. 50 means it's exactly even. The way that I'm trying to use it with the robot is that an imbalance like that can indicate a move, a change in the order flow. So it will try and take it. So in periods where we're getting strong flows and strong market order flows, going with the signal works really, really well. But when we're in a tighter market, The imbalance getting too high, it can be a very effective indicator of a reversal. So depending on what kind of market it is you want to take, go with it or go against it. That's how I use it. Now, how does a market maker use that? Is they're going to look at those sorts of things and they're going to say, oh, okay, there's people are buying. That must mean there's enough people buying relative to selling that somebody probably knows something. There's a high probability of informed traders. So because of that, I need to be more careful about the offer that I put out, because I'm at risk of them trading through and getting me short and continuing to push up, and then I'm underwater. So they're going to use that information to determine whether or not they should actually put bids out there. And they might say, okay, there's high probability of informed traders, so maybe I'll put an offer out there, but it'll only be like 200 instead of the like 3,000 that I want, right? Because it's accounting for the probability of informed trading. What would your advice be if you were in my position, a person who wants to use order flow but also wants you can't have both? You have both. My advice would be to not trade currencies. So if you want to trade order flow, so here's the thing. Order flow is a very valuable tool because you really are not seeing, you really do not get the full picture of what's going on if you're not looking at the order flow. Okay. So order flow is a very, very valuable tool. It's a valuable tool that you're not seeing all of the flow in currencies, right? So I would recommend you would always want to, if you're doing short-term trading, that you should be trading with order flow. And the fact that currencies that you're not able to see all of the order flow is a really good reason to not trade them. But a lot of that is understanding what's going on, keeping yourself out of really bad trades, that sort of a thing. If you come in and you say, I'm going to trade ZN, and all I'm going to do is just look for order flow, quote unquote, setups, probably not going to make money doing that. Okay. You might be able to get break even, but you're probably not going to be able to make a whole lot of money doing that. Market's really, really efficient. So a lot of that, the stuff that you're going to be able to take advantage of, you're not a robot, high frequency trading robot, right? Usually it's going to bring you to break even. And so to really make money from doing this, you need to combine that with other things. So there's a lot of taking a little bit of a bunch of different things and combining it together, right? That's why, like, for instance, looking at the options data and seeing where key levels based on options data is going to be. That's one thing that could help us predict orders. And then we're going to see the order flow in that area help confirm our theory or whatever it is that we're looking at, right? You need to have like something further. So I would trade the instrument where you have the ability to get that something further, right? Like if you worked for a mining company and you know everything that there is to know about the mining business and the different mines in the world for the different metals and the things that could potentially be disrupting them or changing how much they're making or their input costs or things like that, right? Then I would trade copper. I kind of wish we have a large copper mine here in Utah, so I'm always like, I wish that I had access to the information, know everything about that business, trade copper. That would be an opportunity for me, right? If you don't have anything like that, then probably the place where you have the most information online to be able to learn about that business and to be able to develop an edge in that business is probably in fixed income. It's probably in the Treasury futures. And that's why I trade the Treasury futures. Right? Then there's equity index futures, which is a different game entirely because now you're not just like, knowing the equity business and what are the things that are going to move equities as a whole. But it's like 500 different equities, right? So making really like having an edge on a short time frame in an equity index future is a completely different game. And to be honest, I'm really not convinced that retail trader can actually have an edge there. I think that everything that I've seen in equity index futures, you can just chalk up to luck. Right? Unless they're doing swing trades. Like there are some situations where, you know, piece of economic news comes out or a major headline comes out and you know what that means for equities and you take it and you swing trade it. And then that's a different thing. But most people, they're doing technical trading and it's not going to work. It's not going to work. Right. So another way of putting it is that to make money as a retail trader, you need to be an informed trader. And if you are not the informed trader in that situation, then your expectancy is negative. You should not trade. Probably not what you want to hear. But would you say that trading more of a swing strategy with the use of COT and fundamentals would be better for currencies? Oh, yes, absolutely. But here's the problem with that, Aaron, is that if you're going to trade a momentum strategy, for those kinds of strategies to work, you have to be employing it across a ton of instruments. So you can't just come in and say, when there is momentum on a daily basis in 6E, then I'm going to take it long or short and expect to make money from doing that. Because it could be years where it's stuck in a range and those signals don't actually work. But there's always something with momentum. So the trick is basically doing it across a broad enough array of instruments that is a highly uncorrelated instruments, so that when you catch something and it turns into a big winner, that makes up for all of the losses. And then you don't even have to have, because it's not like a predictive signal. Like when the X thing happens, that tends to predict that it's going to, no, it doesn't. You're just getting in every time that it could possibly be at the beginning of a move. Right. And then that way, the move that actually does go, you make so much that it cancels out everything else. Right? That's how a momentum strategy works. Most momentum strategies aren't really practical for retail traders because you don't have enough money to do it. But with micro futures and everything, maybe you could work it out. If you're going to go the way of a momentum strategy, the other thing I would say is you better be a programmer, because the things that you need to really be able to select a good portfolio over there and everything, you need these machine learning algorithms that are able to compare all of the correlations in order to help determine an optimal portfolio. But if you want to go down that rabbit hole, there's a whole world. World that if you're good at it, it's real professional world. There's way more people in the professional world doing momentum strategy stuff than like doing what we do. What we do is kind of like an underserved niche. Like the big boys, they don't really want to play in that arena anymore because of the regulations. So they've kind of offloaded it. There's not really anybody doing it. It's just us. And the other thing was, you were talking about COT and fundamentals. You could definitely incorporate those into your model. I'm just noticing that one of the children drew with a marker on my desk. Oh, good. It was a dry erase marker and it came right off. Take that, Ethan. That actually came off way too easily. Guess it's a wax. hard wax. Well, now the thing is a UV or ultraviolet light cured coating, which is just as good, but like even better. But the hard wax coating on wood, it's amazing. It's amazing. The Rubio monocoat stuff, so great. The wood, it like shimmers. It feels amazing. It feels like real wood. I love it. Okay, so it's time for me to get going, but the Treasuries did something weird today, honestly. At first it looked like textbook, like move down, mean reversion. We caught the mean reversion. The robot caught both ways. Everything worked perfect. But then on the way up, we noticed that there was some really big bids below us. And then more recently, we've started to move down, and it's really, really big. It was 7K offers. So I kind of suspect that somebody might be putting the flip on us. Which is to say, if you have a big move like this, and then there's going to be like a mean reversion period, right? But if you were to come in and like buy it up like this, you're gonna go further. So let me, I don't think I drew that very well because this is too big. You're gonna have this and you're gonna have the comeback, right? If you have somebody pushes back the other way, it's gonna go further. There's gonna be this gap here, right? And then if somebody were to come in again and push it even further, which is basically what just happened, you're going to have that. So somebody might be selling it here. It could breach this range and do chaotic stuff. So I'm kind of disappointed that I need to go. Let's see here. One more comment here from Aaron. Is it possible for me to incorporate auction market theory? Auction market theory is disproven. I have a video about that, about volume profile. You can go and watch and I talk about that. But you still might be able to incorporate volume profiles to some extent. I don't know. But really what you want to think of is, can I predict future orders? Right? Forget all this stuff about like, if it does in this pattern and then there's a probability that it will go this way or that way. That kind of thinking doesn't work. Think, can I predict future orders? Especially if you want to day trade. What's going to be a thing that's going to predict future people coming in and buying and selling it? Those are going to be the things. If you can find predictors of future orders, and then you do all of your statistical data, and that's where you can find real edge. Okay, gotta get going, guys. I will see you tomorrow. Still got PCE tomorrow, so it could be a big day. We'll see. In the meantime, stay excellent.